Thank you all for joining us today for the fourth session in the FinTech Australia series. I'm Arabella Rothwell, Investment Director at Invest Victoria based in London. Invest Victoria is an entry point for international investors looking to enter Australia. We offer a range of services, including market research, opportunity validation, coordinating regulatory approvals, and facilitating introductions to potential partners and customers. Victoria has a strong and diverse financial services sector. Victoria has around 35% of the nation's banking assets. The four major banks in Australia all rank in the top 50 global banks by assets hold, and 50 are in the 50 safest banks and among the most profitable banks globally. Victoria's capital, Melbourne, is home to two of the four major banks in Australia, ANZ and NAB. We're delighted to be joined today by Rick Irvison, Head of Digital Partnerships at National Australia Bank, to talk about NAB's approach to innovation and partnerships. Australia's fund management industry is the largest in the Asia Pacific region and the sixth largest in the world. 6 of the top 8 largest industry funds in Australia are based in Melbourne. We're delighted to also be joined today by Tony Francis, Innovation, Incubation and Enablement at Australia Super, which is Australia's largest industry fund. Melbourne is also home to the largest regional bank, Bendigo Bank, 2 of the largest health insurers, Medibank and Bupa, and 3 of Australia's major challenger banks, Revolut, Up and Judo Bank. There is a wealth of opportunities and potential clients in Victoria for FinTechs looking to access Australia, and it is also importantly 15 to 25% cheaper to operate a business in Melbourne compared to Sydney. We're delighted to have today's session moderated by Anton Rudenklau, Partner and Head of Digital and Innovation Financial Services at KPMG UK, to hear from 2 financial institutions in Australia. Anton specialises in business, corporate and institutional banking and provides advice on strategy growth and client development to top-tier global companies. Although he might be a Kiwi, he likes to claim to be an honorary Australian, so we're delighted to have him with us today. On the running order, Rick and Tony will present for 10 to 15 minutes each, followed by a Q&A session. So I will encourage you all to enter any questions you may have in the chat box at the bottom of your screen. Thank you, and over to you, Anton.
Thanks, Arabella, and good morning, good evening, everyone. As Arabella said, I'm Anton Rudenklau, a bit like Crowded House, from New Zealand, but adopted by Melbourne. Always a good place to be. And I think we have a shared affinity in the quality of coffee in between both markets. I look after our FinTech practice globally. I have a partner that I work with in Sydney, in Polari, so strong relationship there with the FinTech community in Australia. Interesting times for us right now in the global sort of FinTech scene. Just completed some analysis which comes out next week. Aside from some high profile frauds in the marketplace around Wirecard, the FinTech community is relatively resilient in our opinion, and is looking good for at least for the next 18 months in terms of funding, headroom and runway that most FinTech firms seem to have. And also the support from the VC PE community, high net worth, to continue to support FinTech firms as they help innovate the legacy financial services industry. A few things to be aware of. I think we'd all agree that one thing that COVID-19 has helped us with is a sharpening of focus on digital and accelerating of the digital economy rather than digital financial services. So here in the UK, at least, we've seen e-commerce rates as a percentage of all commerce rise by a factor of 3. 6 out of every £10 now spent in the UK is spent online. In March, that was 2 out of every £10. Likewise, for our SMEs and our corporates that are serving the digital economy, they've been automating their processes, whether it is capturing cash, whether it is invoicing, or providing other services as well that are straight through. We've seen a huge rise in the ability to use data. All the cloud providers have stepped in heavily, whether it's using devices like Teams or Zoom as we have right now, or more importantly, supporting the move to cloud-based environments for firms and we'll continue to see Google, Microsoft, AWS, Alibaba, and Tencent move in that direction. They all have programs in place to accelerate cloud adoption. And then finally, it's interesting to note the new forms of virtual economy that are developing. So obviously China been very explicit on their central bank digital currencies. Likewise in France, there's been developments there around the EU coin. There have been new ways of working with 16 regional banks in Europe right now to amalgamate their credit card provision through MasterCard and Visa. So the sort of the rise of a credit card block in the EU. And I'd say down in Australia and New Zealand, we're probably in a similar situation where we have resilient fintechs and a commitment and a realization that digital is far more preferential for our financial services in the future than paper and judgment. A little bit on Australia, and before I hand over to our two guests to speak more coherently than me around their own market. From my perspective, as a global lead looking at the fintech market, Australia is really important. High quality of entrepreneurship within the market. There are roughly 700 fintech that exist in the Australian market already. So if firms are looking to participate in Australia, there's probably two things to recognise. One is fintech is not a new concept. It's been around for some time. So there is a natural competitive set there. But more importantly, the ecosystem has developed to welcome entrepreneurs from the UK very, very well. So whether that is landing pads, whether that is collaboration areas or shared working spaces, or support, for example, from Arabella and the team in the Victorian Government, there's plenty there to support market entry. Open banking, which has been a bit of a damp squib here in the UK, frankly. In Australia, they've perfected the art a little bit more. And also the government has brought in other industries to help open up data sets as well. So an interesting opportunity if you're cloud-based and using data for your digital services. The Royal Commission in Australia, which I'm sure we've all read in the papers over here, created a lot of heat and light and a lot of loathing within the legacy financial services industry. Again, what that has done is help the legacy organisations recognise from a customer perspective what is important, and secondly, that legacy technology needs to move. So if you're providing services into an insurance company, a superannuation fund, a bank, then probably you're going to be welcome if you bring good ideas to Australia. And final one is we have some very good UK fintech that have already established down there and been there for some time, whether that is Recordsure or Revolut on payments and financial crime, or Thought Machine on core banking platforms, or 10X, again, core banking. Firms have successfully integrated into the community down there and helped by the fact that quite a few of the Aussies, or most recent Aussies in the sector, tend to be Brits who have moved over to sunnier climes. So all in all, I think Australia is a very, very interesting place to move to and locate, and a great base for then attacking the likes of Singapore, Indonesia and ASEAN, New Zealand markets as well, if you have expansion views. So firstly, what I'd like to do is probably hand over and welcome our first guest, which is Rick. Rick, I'll keep quiet now and I'll let you talk around life at NAB and your priorities there, and then maybe I'll interject as you sort of get further through your introduction and your discussion.
That's great. Thank you, Anton, and hi everybody. Good evening from Melbourne. It's the middle of winter here, so despite the reputation, it is actually quite cold. As Anton mentioned, Ian Polari, his colleague, is very well known in Australian fintech circles. We know Ian at NAB very well. He seems to spend a lot of time in our office down in Melbourne. But I know he's known to all the banks and financial institutions. A little bit about myself very quickly. I did 7 years in London, so I know London very well. I was at Direct Line for a few years, and then I moved to a Lloyd's insurance broker. So my UK knowledge is insurance rather than banking. And actually, I've really only been in banking since I've come home a few years ago and joined NAB. My role at NAB is Head of Digital Partnerships, which is part of the innovation function at NAB. My role's a little bit more commercial focused. I'm not a classic techie or UX guy. I am more of a kind of strategy and commercial agreements and commercial negotiations sort of person. So I'll tend to manage the partnerships that we take on, and I get a little bit involved in the design, but I've got colleagues who are far more experienced than me at that. I'll bring up a couple of slides just to help guide the discussion. Bear with me for a second while I get that up. Right, I trust you can all see that. Arabella, just ping me on the text if it hasn't come up, but I assume it's working. So just as a quick introduction to NAB, for those who don't know the Australian market, NAB is one of the big four in Australia. We also have a New Zealand bank, which is the Bank of New Zealand, which is not a central bank despite the name. It's one of the sort of 5 major retail banks that they have there. We are, in Australia, we are the largest SME focused bank. So that is sort of our heartland. We've got 500,000 customers. We also have a very strong consumer banking franchise, as well as a corporate institutional banking franchise. We have a new CEO. If you've read the papers, it's Ross McEwen, who obviously left RBS about a year ago. He's come in sort of post Royal Commission. So, we didn't come out of the Royal Commission unscathed. There's been a bit of change at the top, and we have a new chairman and a new CEO. So Ross has joined us from RBS, and he's been here for about 6 months, and already there is a lot of buzz around the stuff that Ross is getting in place. Obviously, he's come in at the time of COVID. We also had very severe bushfires over summer for us. So he's come in literally into the fire, but has the amount of change he's put through the bank in 6 months has been extraordinary. In terms of scale, we've got total assets of 850 billion Australian. That puts us roughly on par with Lloyd's in the UK. So just to give you a bit of comparison there, it's also about the same as NatWest, although not the RBS group overall. In terms of what's not on the slide, but our market capitalisation is about 60 billion Australian right now. That's a really interesting comparison because it's about double Lloyd's, RBS, Barclays. And the main reason for that is just that Australian banks remain significantly more profitable than European banks. In terms of the innovation at function at NAB, so we are a group-wide function across both NAB and VNZ. The 2 banks do operate very independently, but the innovation team does sit across both. So we make decisions on behalf of the overall group and try and roll them out in both banks. We've got an experiments and incubation team, we've got a partnerships team, and we also have our venture capital fund. That's about, I won't spend too much time on the ventures guys, but they're very good at promoting themselves, but there's about $100 million fund sitting there. In terms of the partnerships team, we work across fintech, but we also work with larger corporates and the broader FS industry. So we're not sort of restricted to the smaller end. Obviously, that's the focus for a lot of you guys, but we do work big and small. We typically take on new problems or capabilities rather than just sort of being a +1 to the core business. So we're trying to not just do the next initiative that the mortgage guys couldn't get through. We sort of want to be a bit more ambitious than that. However, we do work very closely with the core business so that anything that we kind of experiment with within the innovation function gets picked up by the main business. We don't want to just sort of do something that's interesting that goes nowhere. So before we start, we do sort of make sure that our the core business is keen on what we're doing. Areas of interest for us, so cash flow management for small business. As I said, we're a big small business bank, so we're really keen on things like cash flow management and helping businesses manage their business better. We're also keen on home buying. Obviously, it's a massive market in Australia, and extending into the consumer space with personal financial management. I'm sure there's nothing new there for anyone who's dealing with banks in the UK. I know they're all looking at exactly the same things. The final thing is obviously open banking in Australia. Anton touched on it. That creates some pretty significant opportunities as well. That if we want to spend more time on open banking later on, I'm happy to address it through the Q&A. The other thing I should mention, we do work globally. We're very happy to partner with international businesses. We have to be slightly mindful about data and privacy regulations, but there's usually ways around it. But yeah, it becomes a consideration, but it's not a deal breaker at all. Just to sort of highlight a few sort of recent successes that our team has had. We've got a couple of businesses here where from a NAB Ventures perspective, we invested and have then also developed commercial partnerships with. So a couple of businesses here, Medipass and Slip. Medipass is a business that does, it's a payments platform for health providers. So they, it's a way of them accepting customer payments online. They don't need you don't need a card machine. It also enables them to claim from health insurers and from government rebates as well. And then it integrates into their practice management systems. NAB's interest in this is we have the leading sort of physical payment system, so point of sale payment system for health providers that does also link into health insurers and government funds. So putting the two of those together is a really powerful proposition for us. The other one that I've got here is Slip. This is an emerging thing that we've piloted in market. NAB was the first business to invest, or the first bank to invest in Slip. All 4 banks have now gotten on board there, and the proposition here is around getting rid of paper receipts. So Slip will produce a digital receipt for so any merchant that's signed up to Slip, their customers will receive a digital receipt straight into their mobile banking app. So you go into your mobile app, you see your the $25 that you spend at your local retailer, and you can actually click into it and get the SKU level data. So you've always got that record there. You can use it for your taxes. You can use it for warranty claims or returns. And then on the merchant side, they get to understand more about their customer base too. So they receive demographics in return, and they can also use it to provide loyalty offers and things like that. Xero is well known to most people. Obviously, the accounting package. We've been working with Xero for about 10 years now, and the way we work with them is we've developed a bunch of bespoke customer features where if you're a Xero customer in Australia and a NAB customer, then you've got access to features that no other sort of combination of accounting package or bank is able to offer. So some of those include bill payments integration. So you can be sitting in Xero, you can upload the bills that you need to pay, and then that automatically generates the data through to NAB, and then you just log into your NAB mobile app and just approve the payment. So there's no manual reconciliation and no sort of double keying on the bank side. It's just a straight approval. We also have the ability to apply for loans using by connecting your accounting package data in. So again, it takes that the manual process out, and you're able to just apply for the loan just using the data that's already sitting inside your accounting package. The final one here I've called out because it's not a partnership, but it's a demonstration of our abilities to build something internally within the innovation team. And so this is the NAB QuickBiz loan product, which was developed outside of our core banking. It's now being scaled and brought into the core. And this is an internal online application, approval in 30 minutes, money within 24 hours. But the key thing here is it's an unsecured product, so small business owners aren't being asked to put up their house. And yeah, so unsecured loan up to 100K. And it's at I think interest rate's about 10.5%, which is sort of a lot cheaper than some of the other dedicated small business lenders out there. This was developed inside the old NAB Labs function, which is sort of where we sit these days. Basically, yeah, from idea through to design and implementation, and it's been in market for a couple of years now with great success. There are obviously other providers out in the market these days, but 2 years ago, NAB was the only one. So that's been a huge success for us. So we have the ability to build things ourselves. I think increasingly we are favouring partnering, mainly to drive speed to market and to leverage the expertise that's already there, rather than making our own mistakes and spending 12 months spinning our wheels. In terms of working with us, and there's a few things here. These are I suppose just things that I'd call out from my experience in dealing with FinTechs and dealing with other partners. It's certainly not exhaustive, but it's probably just worth a few little kind of inside tips. Banks are slow. There's no getting around it. As much as we say we'd like to move fast, we just can't. We're trying, we're getting better, but it still takes a while. As a good example, there's a fintech that we've been speaking to for about 2 years, and we're very close to doing a deal, but we've been very close for a long time now. So it takes a while. The two things that drive that, one is the procurement process itself can be slow, it can be frustrating. There's some very high security requirements, all of that. But probably before you get to that point, just the sheer decision-making process can also be slow. Particularly if you're working with the core bank, you have a lot of stakeholders to deal with, a lot of different opinions, and it can be very hard to get through to the clear decision. But even once you've got there, you are then dealing with procurement and tech and security and things like that. Because of that, you do need to be at a certain level of maturity, in order to get through the governance and procurement and security requirements that we have, and B, probably just to sort of keep yourself afloat while all of this process happens. If you are relying on a bank as your first client, you're going to be waiting a long time. As part of that, you should be thinking about your business model. So are you a consumer-facing proposition? Are you a business or corporate or banking-facing proposition? Are you there to service banks? Or are you trying to do both? And the reason I bring that up is I've seen propositions where they're consumer facing, but then they're also happy to white label it to banks. That has its advantages, but typically I think for that one to work, you need to prove yourself as a consumer facing proposition before approaching banks, rather than just coming to a bank with sort of both options on the table. If you are thinking about working with banks, be very clear about what your proposition specifically for banks is. What problem for banks are you trying to solve? Trying to solve just a banking customer problem is kind of helpful, but we've probably thought about it and we might be working on it as well. So be very clear about what banking problem you're trying to solve. Another consideration is UX. Banks tend to like to control the UX, which means we tend to like dealing with people who will provide APIs that we can then build the UX on top of, but not always. If your existing UX is very compelling, if it's an easy enough to white label, and even if it's just a problem that a bank wants to solve very quickly without having to build the UX themselves, if speed is sort of preferred over the end result, then a white labeling is possible. But by and large, the banks, provided they've got the time and the resources to do it, would prefer to own the UX. And then finally, the last point I'd make is getting investment from a bank VC fund does not guarantee a partnership. It certainly helps, but I'd consider it the start of the journey, not the end. So yeah, getting a bank investment is certainly something to celebrate, but it's not the end of the journey by any stretch. That's it in terms of my sort of prepared presentation. So Anton, I'll hand back to you. Feel free to raise any questions, or we can hold them to Q&A at the end.
Yeah, that's great, Rick. Thanks. I think we'll hold to the end. And the beautiful thing is we're almost on time. We're actually ahead of the curve. So let's pick that up. Particularly if I think around, Rick, some of your needs that you're mentioning here on, and some of the UK fintech or other fintech that are on the line. There's obviously a natural synergy there. So I think they'll be curious. What would be good then is we just move on, Tony. Tony Francis from Australian Super. Morning, afternoon. I'll hand over to you to give your thoughts, and then we'll move into a Q&A and a chat after that. Over to you, Tony.
Hi, I'm Tony Francis. I work in Australian Super. It's actually a very strange time for us to actually be talking to fintechs in general, because we are a bit, like Rick said, a little bit slow in a lot of things in this current time. And what I might do is sort of jump into giving you a few of my thoughts. I've actually got a set of slides, and pretty much I'll follow Rick's pattern to sort of talk you through some of that. Hopefully, you guys can see my slides. Hope that's working. Arabella, let me know if there's it's all good. Okay, fantastic. Cool. Superannuation in Australia is a compulsory system. Interestingly enough, it actually has 2.7 trillion in assets. It's compulsory. That is 9.5% of your earnings actually goes into superannuation. There's talk about increasing it up to about 12% by 2015. It's actually interesting. Australian Super, as Arabella and Anton sort of pointed out, we are an industry super fund. What does that mean? Is actually we typically try to run or we run as a profit and member only organization. So everything that we do in our ethos is pretty much, will this make sense for a member? The good thing about actually that element, and having worked in retail banking and in technology for most of my career, working for Australian Super for the last few years, especially in this role, I've actually seen something very interesting that where there's a commonality with fintechs, is that they actually, very early on in the piece, they have to actually win market share, they have to win customers, and there's a lot of commonality for us, because we are at the heart of actually solving a member problem or customer problem. We are one of the largest superannuation organizations. We got about $170 billion of assets under management. Don't ask me the exact numbers. My actuaries won't give me the exact numbers at any given point in time, but that's roughly what it is. We've got a huge member base. The other interesting thing is that superannuation being a long-term product, it's all about long-term investment returns, and we've consistently been performing at the top end, the top 1% of the organizations or superannuation organizations. The other thing is actually quite interesting about Australian Super is that we've actually got a very diverse range of members, pretty much from all walks of life, all geographies, and all workplace demographics. We get a a good mix of people actually joining via what we call a defaulted into the system. So hypothetically, if you join Macca's and Macca's have an agreement with Australian Super, you would actually get into that into Australian Super if you didn't actually choose a default superannuation fund. But we're also seeing a lot of people now switching or doing their research and actually selecting the superannuation organization themselves. I keep getting strange questions about fun facts about Australian Super, so I actually thought I'll put a couple of things in there to show you. A couple of, I don't know if these are fun facts or boring facts. I'd probably consider them boring facts in some ways, but Australian Super actually owns, or the members of Australian Super own about 2/3 of King's Cross precinct. Another interesting fact, I think both Anton and Rick touched on, Australia is actually in a post era of scrutiny under the Royal Commission, and fair to say most financial services went through a lot of scrutiny, and I'm actually really happy to have worked for an organization that came out fairly squeaky clean in this process. And I think that sort of goes to us having that trust as a core factor for anything that we do. And that's also been one of the key things that we actually take through in whenever we work with FinTechs. So there's about 4 core areas that I actually would look at whenever we're working with any FinTech. Probably, to me, it's actually 4 core problems that we have. Is retirement wealth management. What do I mean by retirement? So what does my wealth look like in retirement? Would I have enough? Would I have enough to have a luxurious lifestyle? One person's luxury could be someone else's nightmare in some ways, or someone else's. It's really hard to sort of quantify that. But nonetheless, we're actually looking at saying, if I was on government age pension, what do I get? What is the gap I need to have? And staggeringly, this is, I'm going back with a figure of about a year or so ago. The average Joe Blow Aussie would actually only retire with about $150,000 in his in balance. Which is really scary when you think of it. That won't last long. So things that we're actually looking at is longevity solutions in that a lot of people have assets in their bricks and mortar in their homes, and they actually want to look at things to unlock that. So there's a huge opportunity in that. The other interesting thing is that why someone like wonder what on earth are we talking about InsurTech for? Our superannuation product comes with default insurance, and so typical disability insurance or life insurance. Those have its own challenges. As how do you actually assess disability? Can you actually pay them out? How much is it paid out? All those, that entire claims management side of it. We actually work with one of Australia's largest insurers, TAL, as our backplane to actually do the underwriting. But we actually constantly looking at how we can actually improve those capabilities. The other interesting thing, and Anton sort of mentioned RecordSure as one of the reg techs that we've been having chats on and off with. But there are interesting facts in that we actually want to be extremely compliant with all the regulatory elements. But there's heaps of automation opportunities there, and we are always looking for what would that look like. And lastly, anything to do with protecting our members' interests in terms of cybersecurity. Those are the sort of four core areas that we look for partnering in solutioning. I'll sort of give you a little bit of what does working with Australian Super look like and how we work with FinTechs. Most FinTechs, when they actually come to organizations, they attempt pretty much a spray and pray approach, and internally and externally, we sort of try and funnel it. Typically, my role is actually to be that funnel or be that conduit between any of the FinTechs. One of the key things for me, I would actually be very transparent, is what you see is what you get. I actually put my personal brand on the line about Australian Super's brand, is actually being extremely transparent as to where we are with within the FinTechs. It's actually really important to have that candid conversation. Is it going to go ahead? There's likelihood of it happening. Always keeping that transparency very clear. The other thing that we actually want or we do is have very clearly defined partnership and sponsorship regimes. Just like NAB, we took part in the Startup Bootcamp initiative last year, which is an accelerator. We're very clear in what we were doing with them. We're very clear in any of the incubation environments or co-working facilities or any of the accelerators that we see. We've got very clear sponsorship agreements and partnership is very well defined in what we want to do. And that's typically sort of helped us be very articulate with what our problems or areas we're looking to solve for, and then everything else, so that actually people don't come back and say, hey, look, we thought this might work. So small business opportunities don't typically come to us because we're actually not solving that, and that's not one of our core issues. The other thing is that what we also got is we very quickly run some exploration and validation exercises. Typically, those are just sort of a couple of workshops, no more than that, no more than a couple of hours. And then by the end of that, we actually would say, is there a head of business that's actually going to take this from concept to implementation? Let's say if it is in Horizon 1, Horizon 2, or Horizon 3, do I have the buy-in of a head of business to actually implement that? The other thing about Australian Super is that we are also are a very small organization compared to the large banks. We are only about 900 staff. So it's actually fairly easy to penetrate and actually get a buy-in where we see it's relevant. And once we actually have that buy-in and sort of commitment, we then would run typical proof of concepts. Either we'll actually run it out of my area where I work in pretty much like a lab environment, where we sort of build it out and test it for a given period or a given volume, whether it is actually for 1,000 members or whether it is for 12 weeks or whether it's 4 weeks, and we learn from that. And then very quickly sort of fail it early pretty much, and if we are failing it, we'll actually take the understandings from it. And successful, we then actually transition that experimental 12 or 4 to 12 week exercise into a business as usual element. So the other question that I was asking, probably this is a little bit boring in some ways. Most people actually know what our recent tech adoption has been is with Microsoft Teams. but also interestingly enough, we started building our chatbots on Google's Dialogflow. And we were also able to pivot and even test out the voice version of it early on in the piece. And it's fair to say, that was one of the successful experiments we killed, because no one was ever wanting to talk about superannuation. It's so boring to a Google Home or a Google Assist at this point. The last thing is that what's my current challenge, and it's actually really interesting, is that given the entire COVID climate, the Australian government has actually regulated that members who are facing financial hardship can get early access to the superannuation. I think there's about $10,000 in the last financial year and $10,000 in this financial year. And this has actually sprung up huge challenges. That's from an investment perspective, is actually how much liquidity we hold and how much can we put through. But that's probably actually our least of our worries. We actually got a very good investment team, so that's actually been our least of our worries. There's actually the other challenge of servicing a member in distress fairly quickly, and also doing things in a manner that's sort of helping them. What challenge we faced there was members who had actually joined via their employer did not necessarily actually fulfill all their onboarding and KYC commitments, and we now run into fraud and serious security concerns. So we actually had to put double steps to a two-step or three-step authentication process to verify that. That's been an interesting challenge, but what has also been interesting is that we've coped with that challenge, and one of the things the incubation area also did was actually test things early. And one of the proof was that when you actually try and go to this page, we also try and work with you in as much as saying, hey, have you thought of, if you take this $10,000 out now and you are 55, you will actually have a much reduced superannuation lump sum when you actually want to retire at 67 or whatever. So those were some interesting challenges. Hopefully I've given you a slightly different flavor to how we work with FinTechs. I've got many examples of good and bad partnerships that we've had with FinTechs, and also what we do with our sort of incubation area. That's pretty much it from me. I'll pause there and answer any questions.
Thanks, Tony. Been very helpful, and thanks, Rick, before that. Enjoyed the slides. The Dialogflow one resonates with me. Technology is not necessarily the answer. It's actually what customers want.
Exactly.
Good on old Google. So we've got some questions that are coming through, and for people who represent the FinTech or the community on this, do ask. Looking at some of the providers that sit on here. So Rick, first question, you mentioned a number of priorities: cash flow, I suppose cash flow forecasting, identity, home buying, open banking. If firms sit outside of those priorities, a bit more esoteric, but maybe in the capital markets or in other areas, cyber. So we've got on the line Bluefire, I think Privitar is on the line as well. How should they engage with you and use your time well, and set out their stall? Because I think quite a lot of the banks tend to follow the same types of digital strategies. And we are finding in the UK there's a next wave of fintechs maturing, which are not necessarily obvious candidates. So a bit of advice to for the audience would be helpful.
Yeah, that's a great question, Anton, because not just because we work primarily with fintechs, that doesn't mean we're the only part of the business that does. And there's a bit of a fine line between what we do in partnerships and actually just procurement deals and becoming a provider into a bank. So things might start in our area and then sort of quickly transition into sort of a core part of the business, or vice versa. So I'm very happy to have initial conversations with people. The topics that I mentioned, they're not exhaustive. They're just sort of the key kind of focuses for us right now. That changes all the time, and so it's always worth having conversations. And on top of that, even if it's an area that's outside of something that we're looking at any given point in time, to the extent that it's relevant to another part of the business, I can at least flick it to them and say, hey guys, is this something of interest to you? So identity or biosecurity or something like that is, it's a great example of an area where, look, it's probably a bit too specialist for us to be playing a significant role, but I'm very happy to make an introduction to our enterprise security guys. Typically I don't want to waste their time. So if I know enough to be dangerous, I'll at least give it a look and go, look, sounds kind of interesting, and I'll flick it to them. Or if I know it's just not something that we're going to be interested in or we're already doing, then I can at least give a pretty quick response.
Okay, that's helpful. And just one other question to follow on from that before we go back to Tony. What's the right approach for a fintech? I mean, we're all time poor. Is it to come in and say, look, we really understand the issue and be a bit more consultative, or is it to flog the service and the product? How do you get the balance right? Because I'm sure you get emails every day. Yeah,
look, it's hard, and I appreciate it's hard for the fintechs as well. It's you don't always know what specific problem the bank is dealing with for you that you might be able to solve. Look, there's probably a couple of ways to it. Our ventures guys are better than we are at scouting the market, and so they have literally thousands of conversations a year, whereas I might have 100. So they'll sort of, because they're also focused more about what's a good investment and what's got a chance of scaling, with or without there being a bank partnership involved, whereas we're obviously a lot more targeted on what's going to work for us. In terms of how do you approach us, look, I think getting on the radar of the ventures guys is really helpful. But otherwise, the topics that I mentioned, if you're playing in that space, feel free to ping me an email. We know a lot of the providers in the areas that we're talking about, but I'm sure there's a lot more out there that we're not aware of. So yeah, look, you can always grab me on LinkedIn or send us an email.
Thank you. Thanks. And Tony, if I just
or speak to Ian. You can just go straight to Ian Palari.
Ian Palari at KPMG. Got that.
Yeah.
Thank you for that. Tony, just back to your areas of interest. So you focused a little bit on retirement wealth management, short-tech, reg tech, and cyber. Some of the firms again on this session represent that. I know we've got Smart Pensions on the line. Awesome firm, by the way. Just plugged in. What's your level of focus between enhancing the service proposition for customers and replacing core infrastructure or doing kind of more significant plumbing deals with fintech? So I'm thinking lots of, if I look at Smart Pension, for example, they'd probably say, well, we can do lots of things for you, whereas on Fido would focus on identity and the reg tech, as you called it.
Yep.
So how do you balance between customer and infrastructure development?
It's actually, I'll probably say our focus has been predominantly in the CX side of it, which is actually the entire customer experience side of it. We've got less to do with our back-end plumbing, simply because I'll probably try and sort of trivialize it in some ways. Our core system is a core system. There's only so many account keeping lines that you can have there, and there's not much of enhancement that we're actually really after in that area. But it's actually wanting to look at what sets us apart is going to be that entire enriched customer experience. Have we made retirement that much more easier? Have we made it a little bit more tangible? Have we made it that much more affordable? Have they thought about it? Our industry is actually really strange in as much as people don't think of retirement or think of anything when they're 30s and their 40s. I haven't actually thought about it at all. It's a light bulb moment and actually goes off and says, hey, what do you do? But when you actually get in there, it's actually really engaging. Sure, the smart pension guys will actually tell you that as well. And then how do you actually make it relevant? So it's all about, for us, it's actually a lot about CX.
Okay, thank you. And I suppose just coming back to the reason we're all here, you know, Victoria, Melbourne, the ecosystem you have down there. You know, Rick, what's your advice if I'm a cool fintech founder coming from Old Street in London, you know, down into Australia? What should I be doing? How should I be drawing on the network that is Melbourne to, one, understand the market, and secondly, you know, draw on local capabilities to be successful?
Yeah, sure. Probably the easiest place to start is FinTech Australia. Rebecca Shotguppy, who's the CEO there, you can always drop her a line and she can connect you with sort of whoever you need in the sector. She's very well connected. There is a hub in Melbourne it's basically called the FinTech Hub. It's in a place called the Goods Shed, about 200 metres walk from both the NAB and ANZ offices in Docklands. There's a bunch of businesses in there that are all sort of related to this space. So Stone and Chalk are one of the more prominent incubation businesses down here. They're housed down there, as are FinTech Australia. So their office is right next door, or at least in the same sort of complex, and a bunch of others. So I'd start there. So, you know, FinTech Australia, Stone and Chalk, and Startup Bootcamp are probably your three sort of major starting points.
Okay, thank you. And final one for you, Tony. I know we're coming up to time. We've got a few minutes left. I see there's some questions coming through. You mentioned Microsoft and Google are on. Obviously, the big hyperscales are down in Australia, and, you know, making cloud a real thing. How should fintech firms think around their infrastructure partners, like those firms or others, and plug into their ecosystems? I assume each of those may have fintech or digital native programs that UK fintech could be part of.
Spot on. We've actually seen a lot of fintechs that actually come across. I would actually say if they're not cloud native, it's going to be much more challenging on their part, but it's also going to be challenging on our part. We have actually only been recently embracing cloud, and I'll say that because we've never had a strong tech team and a tech investment like the banks. Having worked for a bank as well, so actually I know the scale. What was actually really one pivotal element would be the onshore nature of the cloud, and I think that's actually a regulatory constraint for us. And often we actually seen we sort of tend to actually get gun shy of the Patriot Act or anything like that, and actually look at it and say, okay, hey, is it really hosted inside Australia? Prove that. But I think with both Microsoft and Google Cloud, you can actually they've actually gone that whole log and actually can guarantee that that's actually on sovereign soil.
Yeah, I agree. They do have data centers in Australia now. I suppose the rule of thumb is don't go with Alibaba. It's probably not a good one right now.
Yep.
Just for fun. So I see a couple of comments there from Deval Gore at London and Partners saying, nice to see you, Rick, and they'll be back next time. But final one before we kind of finish. So talk a little bit around how firms should engage with you, what Melbourne looks like. Any sort of final thoughts for the fintech teams, Rick, on, you know, what they should be not doing when they come to enter Australia? What are the lessons learned from other inbound fintechs that are helpful to share?
What would you not do? Look, all I'd say is if you're going to come, obviously not now, but in sometime in the future, if you're going to come, do a lot of prep on who you want to see and get those meetings lined up, because there's a lot of financial services businesses in Australia and in Victoria in particular. But do your research, figure out who you want to see, and then start getting those in the diary before you even come. So that way, it's going to be a worthwhile trip. Typically, if you're only out here for a week, Australia's a big place, and even if all you're doing is Melbourne and Sydney, it means you've got 2 days in Melbourne, 2 days in Sydney. That's a very, very, very busy couple of days, and it's very hard to schedule things into that short space of time. So make sure you're here for long enough, and make sure you've got 70% or more of your meetings locked in before you even get on the plane, because it just means that that your trip is going to be worthwhile.
Okay, that's helpful. And I'm guessing, we're hosted by Invest Victoria, so that's an obvious one. Make the phone call first to Arabella and the team, and then maybe to Develop London and Partners. That's a shortcut. Okay. And Tony, any advice for you? And then we'll close off.
I actually,
Arabella.
I actually think it's very simple. I agree with Rick. Don't venture out now, but it's actually even having meetings like this over Zoom or Skype or whatever works is actually really useful. Typically, my only advice is keep your intro meetings fairly short, crystal clear, and then wait for the opportunity to actually be connected back internally and take it from there.
Okay, thank you. Thank you. Arabella, we'll hand back to you as the host for this whole session. Appreciate being asked to help out as well. So back to you, Arabella.
Thank you, Anton, Rick and Tony, for your time this evening and for all the advice and insights on the opportunities in Australia and tips on how FinTech should engage with the market. We'll be sending around a copy of the presentation and a recording shortly. You were able to view the previous sessions we've run with FinTech Australia, Revolut and TransferWise, and also ASIC on the Invest Victoria website. And as Anton and Rick and Tony have said, if you're interested in exploring opportunities in Australia, please reach out to Invest Victoria, because we can provide a range of complementary services to make your entry as easy as possible. So thank you all for joining us, and have a good evening or morning.